What's up? What's up? What's up? What's up? And welcome to another wonderful winning Wednesday. Give me just a couple of seconds while I get set up. There's so many things to do in the day. So just enjoy those vibes as we get set up. So today, I wanted to have a conversation about business loans. And I think what we're going to do today is we're going to turn this into a two-part type of conversation, right? Just because I am having a number of conversations with a number of different small business owners, and I'm constantly running over the same theme, right? And the same theme is I have a new startup business, right? I just, did the normal three steps that you should do whenever you're creating business. Why? Because we know that you absolutely don't want to be doing business in your personal name, right? So, most business owners, and there are some business owners who haven't done this yet, but and those are the folks who are working as a sole proprietor, right? And those folks working as a sole proprietor, what we want to do is we want to get them from working in their business name, because working and using their business name means that they have an enormous amount of liability that they are putting on themselves. And it's not necessary to put that type of liability on yourself. So definitely it's not something that you want to do. So, with that being said, let's have a conversation today about how to get business loans with bad credit. I hear that quite often. No collateral and or no cash flow, right? So the first part about that is, do you have a cash access problem, right? So most business owners, they follow the path that they would do if they weren't a business owner. And guess what that path is? That path is to go to the traditional commercial bank and ask for a loan, right? So that's where most business owners go. They go to the bank and they follow the same process that they've been successful at for getting their car loan, for getting all manner of things, right? That's where they go. But are you familiar with the Department of Revenue? And they have published a statistic that less than 2% of all business loans come from traditional banks, right? Personally, I like to work with the community banks. And there's one particular reason why I like to work with the community bank. I like to work with the community bank because the community bank is where I'm going to walk into that office. And in that office, I will be able to have a conversation with the branch manager, right? And that branch manager is going to be that same individual who, when it is time for me to get approval, that branch manager is going to carry my water to that investment committee and say, well, I know Mr. Johnson. I know his accounts. I know how much transaction or money is moving through his account on a monthly basis. And guess what? He or she, because I just had a change at my branch, he or she is going to go and basically carry the water for you, right? And let everyone know that, hey, and let everyone know, hey, this guy is this guy is the real deal. You want to give him a loan, right? But I also know that when it comes to banks and bankers, I love bankers. In my BNI group, Vicky is an amazing banker, right? If you're in Northern Virginia, she's with BCT, and BCT has been in business forever, like from the 1700s, 1800s, that type of bank, right? The thing is that banks deal with a very conservative amount of risk. Banks are traditionally conservative, right? Because the lending business is very risky, as over 90% of businesses fail within the first 10 years, right? So if you're thinking about your business from that perspective, right? Even the Titanic was never supposed to be sinkable. However, the Titanic was sinkable. Now, you can analogize your business to having the potential of a Titanic. Now, the Titanic was not supposed to fail, but it did. So if it does fail, do you want your personal financial record to sync with it? I think that's one of the primary reasons why a business owner needs to be in a position where they are separating their personal finances from the business finances. So let me give you another stat. 89% of business bank applications are typically denied. That's coming from the Small Business Lending Index. And there is an article out there on Bloomberg that says funding a new small business, don't bother with the banks. You need to have a conversation about alternative financing. And we're probably not going to jump into that today, right? Because there are other forms of financing outside of the traditional bank financing. So even though most struggle to get money, 86% of small businesses rely on some type of credit or financing for survival. That's coming from the National Federation of Independent Businesses, right? And most of those businesses that are relying on some type of financing, right, will use many different modes in order to get there. So there's credit cards, there's loans, there are lines of credit, right? So per the SBA, the major reason for business failure is this: insufficient capital, right? Insufficient capital or lack of adequate funding. A colleague of mine, Eric Bird, who is over here at the Loudon SBDC, he would add another one. And the one that he would add is lots of businesses don't understand who their customer is. So many, many years when, we were looking at starting up a business, we had reached out to Eric to tell him about our business idea. And, I really think, I really thank Eric for what he helped me to understand is that we need to have a true, firm understanding of who our customer is, right? Because everything that you do will be speaking to that customer. Everything that you do and say on social media needs to speak to that customer. Emails that you send out, newsletters that you send out, all of those things actually need to speak to that customer, right? This is the reason why you need funding, right? Because if marketing isn't your wheelhouse, right? If marketing isn't something that you enjoy doing, which I don't enjoy posting on social media about myself, but hey, every so often I'm reminded that hey, this is probably something that you should actually talk about. That needs funding. The digital marketing strategy needs funding, right? But let's not get back onto, well, get too far off course because since most small businesses can't easily get money, that leaves over 9 million American businesses that need money and can't get it according to the National Small Business Association. And let me tell you guys, oh my goodness, I am speaking to so many business owners. And this is not to pass judgment, but on their journey, I have to question whether or not if people realize that no one is in the business to give you money in order for you not to have a reliable means of paying back that money. You can't even go to a family member and borrow money and not be assured that it's going to be returned. Otherwise, the turkey dinner on Thanksgiving is just a little bit sour just because there are mean mugs all over the place. So, the question that we have for today is, are you one of the 9 million who need money for your business, but you're unable to get it? Right? And so, you're going to love what you're about to learn over here. Now, the epitome of all of this is the SBA loan, right? So if you're looking for money for your business, there's great news, right? There is absolutely great news out there for you because there are billions of dollars waiting to be spent or lent to small businesses. Billions of dollars waiting to be lent to small businesses. But most of this money will not come from the traditional banking system, right? The real problem isn't that there isn't money to borrow, it's that most business owners don't know where to go or how to get approved. So they're basically at the wrong location asking the incorrect questions because they don't know how to get approved, right? So let's just talk about it. If you're going to go the route of an SBA, which the SBA for the most part is a guarantee, the bank, because they are conservative, probably wouldn't make most of those small business loans if there wasn't that guarantee that the SBA was providing. So all the big banks and most smaller banks use SBA loans as their primary business funding program. Let me repeat that. All the banks and most smaller banks use SBA loans as their primary business funding program. These types of conventional banks are very good, well, sorry, very hard to qualify for, as the borrower, you, the borrower, must qualify per SBA guidelines and the lender guidelines. So not only do you have the bank's guidelines that you have to conform to, but you also have the SBA guidelines that you equally must conform to. I think in certain instances, when you are applying for and submitting the application, it might be easier to donate your kidney in order to qualify than sometimes when you have to qualify for a traditional bank loan, right? So SBA loans are always tough to qualify for because the lender and the SBA will evaluate all aspects of the business, and not just the business, but they will also qualify the business owner before they provide their approval, right? So to get approved, all aspects of the business and the business owner personal finances must be near perfect. And I say near perfect to ever get approved. So to get approved for a traditional loan, you have to have excellent 800, 750, and above personal credit score with no derogatory reports. So no bankruptcies. The debt to income ratio has to be within a certain bounds, right? But one of the things that a lot of you may not be familiar with is the fact that you also have to have liquidity inside of your bank account as well. We had that conversation probably a couple of moons when I was talking about what's the averages that you need to have, there's 3 9s and 4 9s and 5 9s, etc. But those are the things that you need to have inside of your bank account. The one that gets a lot of people is they have no idea as to, well, what is my paydex score? What is my paydex score? And you want to have a paydex score that is 80 or above in order to get the best terms, right? And if you want to increase your paydex score, what you should do is pay off the debt a little bit sooner than when it is actually due. And that's how you move up on your paydex side, right? So let's continue on with the theme here. You'll need to have excellent financials that show good net profits increasing from year to year. You need to show you manage the cash flow good per your business and personal bank statements. And you'll need substantial collateral to offset what you're borrowing, sometimes equal to 100% of what you borrow. That's the crazy piece of this, is that there are times where you need to have the amount that you are asking for from the bank in the bank. Now, that gives you a little bit of liquidity, because if you had to spend that money, then you don't have that money to use in other places. But it is definitely something that you have to think about as you are trying to ensure the viability of your business. You have to make sure that that money is going to be available to you as and when you need it. So in addition to that, you have to have your P&L statement, right? And this must be current within 90 days of your application, right? So yeah, you have to have something like QuickBooks, etc. You can't walk in with a box of receipts and say, well, I made this amount of money, I made that amount of money. No, your P&L must be current within 90 days of the application. So definitely something that you have to keep in place. And not only must you have your current P&Ls, but your projected financial statements going out probably 12 months is something that you may have to have as well, right? They're going to want to see how you're forecasting for the growth of your business and moving into these different areas. So, yeah, we had the conversation about applying for a traditional business loan and going via the SBA route. It's just that you're going to have to provide a tremendous amount of documentation in order to be able to do so, right? You have to have your business license and certificate, right? And you have to have a loan application history, which includes records of any loans that you may have applied for in the past. But they're actually going to pull your business credit profile from one of the commercial reporting agencies, and they'll have that information as well. You also need to supply business and personal tax returns, typically for the last 3 years, right? Resumes. Why is it that you are in this business? They want to have a track record for what's going on there. You're going to have to do a personal background information. Your business plan needs to be there, your business credit report. All of these are qualifications that have to be there. We talked about it, income tax returns, previous 3 years, plus the business overview in history. And this is only going to be the starting point, right? The starting point if you're going to be applying for an SBA loan, because the SBA loan is going to look at your personal credit, right? So your lender will obtain your personal credit report as part of the application process. However, you should obtain a credit report from all three major credit reporting agencies before submitting your application to the lender. You know what's going to be there before they tell you what is there, right? As they say, the best offense, well, the best defense is a good offense, right? And that's something that you want to do and have in your hand as you are looking to apply for credit. And guess what? There's identity theft. There's so many things that happen. And the reason why you're pulling your personal credit report before you're applying for business credit is, yeah, they don't always get it right. There are times and instances where inaccuracies and blemishes on your credit report can hurt your chances of getting your loan approved. So it's critical you try to clear these up before beginning the application process. But this is going to work out with any type of credit that you are applying for. You need to know what's on your credit report before you apply. That way you can clean stuff up. And on the personal side, I would recommend that you freeze your credit if you're not going to be using it. It's a free service with all of the personal credit reporting agencies. If you're not looking for credit, why leave it open so that some nefarious person can come in and just take advantage of you? I would say that you don't want to make that happen. So if you're going to be setting up a brick and mortar place, right, you're going to need a business lease, right? You're going to need bank statements because bank statements can be used for one of these alternative financing, right? Business revenue financing. You need your business certificate, your license. And one of the things that you have to talk about is you're doing all of this in certain instances before you have even created the business. So you know how they say you got to spend money to make money. Here you are establishing your going concern, right? And you're putting out this money without a true forecast of when it's going to come back, right? And the proof of collateral is definitely going to be something that's necessary here. Legal documents. So you have to have for your if you're filing as an LLC, which is what we have done for our business, you need to have your articles of incorporation, you need your operating agreement, right? If you're going the franchise route, right? I've had bad experiences with franchises, so you don't want my opinion there, but you got to read the FDD and know what's inside of the FDD, because the FDD basically tells you everything that can go wrong and the experiences of other past franchise owners and how many have entered the system, how many have exited the system, etc. Lots of good information is contained inside of the FDD, but it's federally mandated that they share that with you because the government wants you to know exactly what it is that you are getting yourself into, right? So those are the things that you have to supply. And if that doesn't take away your breath, I don't really know what is going to take away your breath because basically there is going to be an interrogation and microscope of everything that you have touched over the last few years as you are trying to apply using the SBA vehicle, right, for a loan. So, was that a lot of stuff? Yeah, wow, that's a lot of stuff. As a result, most business owners struggle to get approved for financing because they and their business aren't as perfect as the lenders and the SBA require. They don't have the three C's, as we like to say. They don't have the collateral, the cash flow, and the credit needed for approval. You got to have at least one of the three C's, right? Collateral, cash flow, or the credit that you need. So typically, what we try to do is we try to keep this meeting to 30 minutes, right? Just so that, you know, we know that you are busy and you probably want to take this in small bits and bites. But one of the things that I wanted to share with you is that if you do have a business credit question, right? I would invite you to jump on with us or use either any of the mediums that we have: LinkedIn, Facebook, YouTube, to share with us any of the questions that you may have around building out your corporate credit profile. Because while it is an arduous task to go about building your corporate credit profile, I do not believe that it is something that is impossible to do. And if I can do it, I believe that you can do it just the same. So, what we're going to do for next week, we'll have the wonderful Miss Eunice back, right? And we'll dive more into some of the alternative funding sources that are available to you, right? And we'll just dip our toe into that for just a little bit and discuss, well, what are some of those alternative sources? I had mentioned one being business revenue financing, right? So if you can document and show that you have about $10,000 a month coming into the business bank account and you have 6 months of statements, you can get approved for credit based upon that. And it's usually up to 100% of what you can show coming into the business. That might make a lot of sense to you, right? But there are also accounts receivable financing at the same time. So there are many different things that you can do in order to be able to get the funding that you need for your business. But one of the things that you need to do is you need to have an intelligent conversation with someone who really understands the process, because there's nothing worse, I believe, than wasting time going through and having conversations that are just going to lead you down a path that will eventually be detrimental to you, to your family, to your business, right? Because if the business fails and you have had personal guarantees on the business, that's going to impact you on a personal side. Remember my story about the Titanic. It wasn't supposed to be sinkable, and we know that the Titanic did sink. So, with that being said, I'm going to bid you a farewell for this day, this wonderful Winning Wednesday. And you take care of yourself, and we'll catch up again next week where we dive into alternative funding sources. Have a good rest of your day.